Hi, everybody. It's Mark Yagi from StockTradeGenius.com. I'm the Stock Doc, and today we're going to analyze Facebook stock. And we're going to start out by looking at the weekly chart. Notice here on the weekly chart, Facebook has some periods of long consolidations where it trades fairly range-bound. And when it does, it generates a huge amount of power when it breaks out. So you look at this here on this cup and handle, you'll see this big power coming through that handle. And you'll see that it broke out and it has never gone back below that. It did ease up many weeks in a row right after that breakout, and then it came back and tested some of those key areas, but it didn't really break out too much after that. It just kind of consolidated. And everybody bided their time. As I said, this is a weekly chart. They bided their time until the earnings period, and everybody thought, well, the earnings are going to be great, and they were great, but they warned going forward that they're investing a lot of money in R&D, buying other companies, and as they're doing that, people were a little bit skittish, and so you'll see here, and we'll analyze it a little bit more in detail, you'll see here a stalling breakout, a failed breakout here, kind of toward the right side of the chart. You'll also see some of these arrows, red and green, and I'll explain those in just a second. So that's kind of the overview. You'll see here, I've drawn out a cup formation, and it's also in a tight consolidation pattern. So you can kind of get an idea that Facebook doesn't like to jump around a huge amount. If you're in it, though, it's painful. If it's going down, if you're reading the charts properly and you can figure out where the bottoms are happening, then you're probably sitting pretty good here. So let's take a look at another weekly chart. Let's expand that a little bit right here. So here's a tighter analysis of the right side of the chart. And you can see as I've zoomed in, you can start to see, okay, look, the stock has had a fairly decent downdraft here on the left side of this cup formation that I've drawn, this consolidation pattern. But it's also starting to make a climb up the right side. Now, let's look at the volume, because it isn't all about price. It's about analyzing the volume. And we can start that analysis even before we went into this consolidation. So you can see we had a spike in volume in this blue volume bar. And then the week after that, we had kind of a stall and on less volume, but still pretty high volume above the average. And then we started kind of a downward trek on low volume, not bad. A little bit of a bounce on low volume, not bad. A little bit of a decline on average volume, starting to get a little worrisome. That's going into this this quarterly earnings announcement, which you can see was very hopeful at the beginning of the week, and by the end of the week, it ended up almost exactly where it started on huge volume. That was an indication that even though the bars are blue, that was really an indication that things were not looking good right at that point. People were not having confidence in Facebook, and you can start to look at the week after that, went down through the 50-day moving average or the 10-week moving average on this chart. That's bad in itself. And it did it on average volume. So that's not the worst thing in the world. But then you had a confirmation week where it went even lower and it touched the 40-week moving average, the 200-day moving average, if you will. That's not good when you get a couple of weeks in a row for first the 50-day moving average, then the 200-day moving average, or we could call it the 10-week, then the 40-week. And then it went again and tested the 40-week moving average and bounced off it nicely on higher volume than the week before and higher than average volume. That's a good sign. That was basically a sign of capitulation that, okay, look, all the sellers are out. Now, if you look at the selling action over the past 6 weeks here in this consolidation, it hasn't been huge. So that tells you the weak people that are all looking for the excitement are all moving on to a different stock. And so what's happening is the institutions are just sitting down there watching it come off its 50-day moving average, its 200-day moving average, and they're just saying, come to Papa, we're going to buy some of this stuff as it comes in. And then they got really serious on this second week, testing the 40-week moving average, this blue bar on above average volume, on higher volume than the week before. And if you know, the market's been kind of sideways here. And then the week after that was kind of a stall week, and it's doing something we don't like to see stocks do, and that's trading below the 10-week moving average. It had 5 weeks in a row here where it traded below the 10-week moving average, but notice the volume has never been very convincing. Until now, it's starting to peek its head above the 50-day moving average or the 10-week, and now we're going to start seeing some action on the upside if the market can help it. Let's take a look at it on a daily chart. Okay, so now we have the daily chart of Facebook, and you can see this is where the real work begins. Now, if you just think you're going to be able to look at a chart and buy and sell, you've got another thing coming. There is some work involved in making money in the market, and that's the biggest problem with most people have, is they think they can just click a mouse and make a ton of money, and they end up losing money because they don't manage their emotions or they don't manage their risk. And they probably don't do the kind of work you need to do on each and every stock to sit through some of the periods where you're not predicting that it's going to go down or go up. You just didn't predict it right. But if you look at the stock, if it's acting correctly, then you're not in the worst shape in the world. Let me show you what I mean. So let's start at the right side of the chart. You'll see 3 green bars or blue bars moving up, okay? And they're moving up on increasing volume. And one of this is an incomplete day here on the right. And as we move to the left, let's go all the way back to the top of the handle here that we've drawn on the screen. Actually, we'll look at the whole consolidation. See this blue line on top, this blue line on the bottom? There's a full consolidation going on in here. And so looking at how things have progressed, you can see not too much volume on the sell-off at the left side of the consolidation. So there really hasn't been much interest. Everything was kind of gearing up for earnings, and the market was kind of going sideways. There just wasn't much going on until you get to the top of that cup, that green cup that we've drawn. Look at that volume bar. It went to an almost high. It never quite made it up to the previous high. And then it had a huge correction on huge volume. This is the biggest volume on the chart. And so you've got to notice that when it has that kind of a correction, that's telling you something. And that was off those earnings, and the stock went up, hit a high, and boom, they didn't like the earnings. So that portended a big sell-off, and you can start to see it was a bunch of days in a row. Even this stalling day, this blue day, is still a negative day. It didn't do anything. It just hung out. But the selling was just progressively brought the stock lower. Now, as the stock was going lower, you can almost see a cup forming in the volume. And that's a key thing, is if there's not a lot of sellers, there also aren't a lot of buyers, by the way, then that stock is not really being panic sold. And so you can kind of hang in that a little bit longer. Now, the negative of that is that it was below the 50-day moving average. And for a long time, for a couple of weeks here, it was under the 50-day moving average. That's bad. It's just not that bad because the volume wasn't really high. It was high on this one day, and then all the other volume days under the 50-day moving average averaged out to be much lower than the average 50-day moving average volume. Then you had a big capitulation up, 3 straight days off the bottom on huge volume, right? And increasing volume. And then you kind of had a little handle happening right here where it went back and forth, another mini consolidation, if you will. But notice, look at the volume is almost nothing. Now, we are getting into summer, and that's going to happen. But basically, that's saying all these people that get bored with these stocks that don't move up and down, they start to sell off. And the big money is not selling off. They're just kind of hanging back. And as they hang back, when these stocks start to hit key levels, like if you look at that trend line that I drew here, you'll see that as it comes toward those key levels, it kind of bounces off those levels. And now people are saying, well, the big money's saying, okay, all the weak holders are out. We're going to start buying it. And that's why you're starting to see some of these big jumps off the bottom of the chart. And you're starting to see it on increasing volume. I suspect that in a week or two, when everybody starts to get excited about Facebook again because they've forgotten about it because it's been so boring, that you're going to see some volume spikes, a lot of excitement in it. Mom and pops will be buying it, but so will the big money, because it's going to be coming back into that area at the top of the consolidation that the probabilities show will be breaking out. So that's our analysis up until today of Facebook. And you can kind of see that when a stock sells off on lower volume and goes up on higher volume, that's bullish for the stock. If the stock sold off, not in this case, but if the stock sold off on high volume, that's really bad. So those days that it's selling off on high volume are days that you need to take note and days that you need to react. The other days are days that there's really not a lot of decision making going on, so it's okay to kind of hang in there, especially if you're in the green, because good things are probably going to happen, especially if the market can cooperate with you as well. So that's Facebook.